Welcome back to the channel, everyone. If you've been following the Iraqi dinar and waiting for signs of a major shift, today's update is going to catch your attention. We've got breaking news out of Iraq, and it's coming straight from an official government source. The Central Bank of Iraq has just made a critical move, adjusting the official exchange rate of the Iraqi dinar to 1,300 dinars per US dollar. That's a notable change from the previous rate of 1,470. On paper, that might not look like a huge shift, but for those of us watching for a full RV or reinstatement, it's a major signal. Now, before we dive into speculation, let's go over exactly what's happening. According to Shafaq News, the announcement came directly from the government spokesperson, Bassem al-Awadi, who confirmed that the new rate is part of a larger series of economic reforms. The new budget includes this updated exchange rate of 1,300 dinars per dollar. That means it's not just a short-term measure or a rumor. It's officially baked into Iraq's financial planning for the year. The move is meant to combat inflation, improve economic confidence, and increase transparency in financial dealings. So what's the bigger picture here? Some analysts believe this move shows that Iraq is slowly transitioning back toward a stronger, more stable dinar. And for the global currency watchers, especially those of us invested in the possibility of a revaluation, this looks like a stepping stone. Remember, this isn't the first time Iraq has shifted the rate. Back in late 2020, the government devalued the dinar to around 1,460 as part of emergency measures. That was a blow to many. But now, this reversal toward 1,300 could be the beginning of a new phase, one of appreciation rather than devaluation. The big question is this the start of the RV process? Could Iraq be positioning itself for a larger revaluation event, either in the near term or over time? Well, let's consider the context. Iraq is under massive pressure to modernize its financial systems. The U.S. Treasury and IMF have been working closely with Iraqi banks to implement stricter anti-corruption standards, digital payment systems, and compliance with international norms. Just recently, the U.S. helped push Iraq to reduce dollar smuggling into neighboring countries like Iran and Syria. The central bank even cut off 14 private banks from access to dollar auctions, citing concerns over illicit activities. That's not just about stopping crime. It's about aligning with global expectations. And when you look at countries that have gone through monetary reform in the past, these same patterns tend to show up before major currency shifts. Another clue. The ongoing conversation about Iraq's oil revenues and sovereign wealth funds. Iraq's oil income is booming again. Their reserves are strong, and they're actively diversifying their economy. Combine that with the adoption of electronic payment systems, and you start seeing the infrastructure forming for a more stable, internationally respected dinar. Many in the dinar community have long said that Iraq can't RV until it has the proper framework in place. Well, look around. Those conditions are finally starting to emerge. So what should we take from all of this? First, the move from 1,470 to 1,300 is not the RV. Let's be clear on that. This is a managed adjustment, likely approved by the IMF and other financial bodies. But here's the key, it shows movement. It shows that Iraq is willing to make changes. And when we see movement, we watch for momentum. The contract rate, the international rate, the RV rate, whatever you want to call it, hasn't been publicly announced yet. But if Iraq is serious about joining the global economy and freeing itself from decades of dependency and instability, a stronger dinar could eventually be part of that long-term plan. This move could be a trial balloon, a way to test the markets, stabilize inflation, and demonstrate confidence to investors. So here's what we'll be watching over the coming days and weeks. Will the Iraqi government issue more reforms tied to this rate shift? Will the central bank release any further guidance on future exchange policies? Will we see more signs of de-dollarization inside Iraq, like mandatory dinar use for trade and salaries? All of those things would point toward a broader monetary reform agenda, and possibly, just possibly, a revaluation in the making. Let us know what you think in the comments. Do you believe this is the first step toward an RV, or just a minor adjustment to calm inflation? And if you're holding dinar, are you feeling more hopeful today? If you found this analysis helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. We're going to keep following this story closely, and as always, we'll break down the facts from the hype. Thanks for watching, and stay tuned. Something big might just be on the horizon. Like and subscribe for more videos.